Hey guys, Roger here with Vantage Realty and Home Loans. Thank you so much for joining me. In today's video, I'm going to talk to you guys about how you can raise your credit score so that you get the best deal when you go to buy a house. And if at any point during this video, if you're enjoying the video, please hit the like button and hit the subscribe button and the bell to be notified. I'm coming out with videos every single Friday and sometimes a second video during the week on all things real estate and mortgage related to help you get the best deal when you buy your next property. So I've been dealing with a lot of people who have come to me who want to fulfill their dream of buying a house. You know, buying a house is one of the top American dreams out there, and a lot of people work hard, save their money to accomplish this dream, and it's totally doable. But a lot of people that I've been dealing with have had issues with their credit report. Now, you know, when I was young, I went into credit card debt. It happens. I don't know how the banks were giving out credit cards to a kid like me when I was 18 years old, and they would give me a $10,000 credit limit when I was a teller at the bank making 12 bucks an hour. So working part-time. So look, these things happen. You get into credit card debt, you can get out of it, okay? So one of the first things that you always got to make sure to do to help your score is always make a payment on time. Okay, it's very easy, especially this happened to me when I was moving a lot from one apartment to another when I was younger in my early 20s. Bills got lost in the mail. I forgot to update my address and the bill went to my old address. I never got it and I got a missed credit card payment. A missed credit card payment can cost you 40 points on your credit score. So just to put in perspective, if your credit score goes down by 40 points, that means your interest rate when you go to buy a house, instead of it being 3.5, it would be about 3.75. So it's going to cost you 0.25% on your interest rate. And if you have a mortgage of, $500,000, 0.25% can mean a lot of money in the long run. So set up auto pay, right? Set up for online statements. Get the bills delivered to your email, set up auto pay for the minimum payment so that you never miss a payment. This is the easiest way to keep your score up, is make your payments on time. So the second thing that you should be doing if you have credit card debt and you want to raise your score is keep your balances to under 30% of the total available balance. So just for example, just to use easy numbers, let's say you have a credit card and the limit is $10,000. You want to keep your balance under 30%, which is $3,000. So get it down as fast as possible. If it's 30% or lower, your score is going to jump up. Super easy way. Come up with a plan. Don't add any more debt and come up with a plan to get that down to 30%, whatever it is. If the limit's $5,000, you want it to get under $1,500. So do the math. 30% of your limit, get your balance under that number. All right, so the third thing you want to do to improve your credit score, and this is one that you might not have known about. In order to get your credit score up, you need to have at least 3 open trade lines. So you need to have at least 1 car loan and 2 credit cards, or 3 credit cards. Whatever it is, you want to have at least 3 up to 5 open and active credit cards. Now, just because you have 3 to 5 credit cards doesn't mean that you have to go into debt. Doesn't mean you have to rack it up and spend on them. Even using them once a month and paying them off makes a big difference. If you only have 1 credit card, then that looks to the bank like, hey, this person can't manage multiple credit cards. And if you have 5 cards and they all have low balances on them, then you're showing the bank, hey, I can manage credit, and that will help your score. So if you only have 1 account or you only have 1 or 2 credit cards, you want to open up a couple more. It really doesn't matter. Just keep the balances low, make the payments on time, and that will help your score. All right, and the last thing that you want to do to improve your score is have a mortgage consultant. Have a loan officer, a mortgage expert like myself, pull your credit. You don't know what's going to show up on there. I recently had a client who co-signed on a credit card with a friend. Okay, now probably don't need to get into all the details, but you should really make sure you know who you're dealing with if you're going to be co-signing on a credit card. It must be like a dire situation for you to help someone out like this. Be very, very cautious when doing this because you want to help people out. I totally get that. I'm right up there with the rest of you. I'm a giver. I'm always wanting to give and help and do whatever I can. But you also don't want to overgive and have it come and bite you in the butt. So what happened with my client is he signed on a credit card with a buddy of his years ago, like a couple years ago. I go to check their credit. They found a house that they love, new construction, beautiful house. We go to run their credit. His credit score was low, and it turns out his friend had not been making the payments on the credit card that he co-signed. His friend stopped paying, didn't notify him, and had a balance of about $2,000. So he had to go pony up and pay that off, someone else's debt, and his score suffered because of that. If it wasn't for that, his score would probably well over 700. It ended up being in the mid 600s. And what's going to happen is you're going to end up getting a worse interest rate, and a worse interest rate on a loan of that size on a mortgage that's hundreds and hundreds of thousands of dollars makes a big difference on your monthly payment, makes a big difference on how much interest you're paying. So be really, really cautious and check your credit, because if we had waited to the last second, like if they were going to put in an offer tomorrow, he would have been screwed. It would have been a really, really bad situation. But luckily, their plan is to buy in the next 3 to 6 months. We have time to fix it, but still, you never know what the hell could be on there. So have someone check your credit. And then a mortgage broker like myself, we have a credit simulator tool. So let's say you're at a 680 credit score and you want to get to 700 to get the better rate. We can run the simulator and tell you exactly what you need to do to get your score to 700, 720, 740, etc. Okay, so those are the steps that you should be taking to improve your credit score. 4 easy steps. Anyone can do it. All right, so number 1, you want to make your payments on time. So set up the auto pay. Number 2, you want your credit balance to be 30% or less of your credit limit. Number 3, have at least 3 open and active credit cards or trade lines, which can include car payments. And number 4, have a mortgage professional pull your credit, see where you're at, and see how you can improve your score. So thank you guys so much for watching. If you enjoyed this video, please hit the like button, hit the subscribe button, and hit the bell to be notified. I'm going to come out with videos every single Friday, like I said, and you don't want to miss out what's coming next week. So thank you guys so much for watching, and I'll see you guys next time.